Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Ira Epstein, and here we are on Wednesday. This is the 12th of October, 2011. You know, I'm finishing up my charting course, and I swear I'm in the last couple of chapters. Been working on it all day today. Going to finish it up before the weekend's over, and I'm going to be done with it, and you'll hear me talking about the release of it. But I want to warn you all about something today. You know, one of the things I try to do is via my webinars, not these videos, really give the best impact I can. If I were to label myself again or reinvent myself today, I'd call myself not a broker or a market analyst, a market strategist. Because that's what I think the technical work I do does. And it's in the webinars that I have, that's part of this futures kit, that I come up, and I'm going to actually make a recording so that you can see them behind me and explain how they work, that I give you what I think you should be doing in the market. I can't, in these videos, come out with buy and sell signals. Not allowed. Not just by me, by the regulators, because of the general audience watching it. But in my webinars, because I control who sees it, I can do that. So that's what I want to offer today. If you haven't seen any of my webinars, I want to give you free access. I have people that pay me every month a subscription. It'll be a limited time, but that's the way that I pick up subscribers, and I think it's the way that you might want to pick up the information. 1-866-973-2077. In the stock market, what I said today, I'll tell you right now. I said liquidate. I think you've gotten up so high, so fast against previous trading range and Bollinger tops, it's time to take money off the table. Not be bearish, time to take money off the table. But that money coming off the table could impact the gold market. It might settle back now, because if the stock market does as I'm suspecting, and we reached a peak of sorts today, and I'm not saying the top, but a peak, you've gone straight up for 7 days in most of those markets, well then, it's time. And whether it's 7 days or 6 days in a row, the stock market and the Dow went almost up 1,000 points. There's a point at which it's ahead of itself. I think you're there. I also think you got ahead of yourself on the downside. You heard me. Downside in the bond and the note market. I think that what happened is you go back to the latter part of September, and we're right into this point right here. And that was where the liquidation in the stock market happened. That is where the bonds got bought, because we're hearing Greece coming unraveled, structured default or possibly just a default, double dip recession in America. So what's happened in between? Well, in between, the economic data here has gotten better. Chinese economic data hasn't gotten any worse. They're no longer talking, at least the everyday, a hard landing the way that they were talking earlier. And I don't have to tell you about Greece. I'm not saying problems are resolved. I'm saying they're not as bad as they were, and the market resulted in a rally from 1535 up to today's high of 1693.90. Some of this has to be, if you will, spun around now, and I think we're at that point in time. So when looking at the gold, I'm bullish. I think at the end of the year it'll be higher than it is right now. Can we get a setback in between? Yeah. And it wouldn't surprise me if you even want to set back to the July 31st close of 1621.70. I'm not saying it has to go there, and the pattern is clearly one of higher highs and higher lows on the chart. But when I run this 18-day average of closes, I can't get away from the fact that the market is having one heck of a time at that number. It's having real trouble staying over it, and that means it might ride it to the downside a little bit before it's out of this mess. I'm thinking that that's probably what's going to happen. Today's close is going to be higher than this in the COMEX market. It's going to be around 1682. So I know it's over that 18-day average, but to get a $10, $15 drop off this is nothing at the current price level. The 100-day average of closes, which is coming in at 1652, is going to meet up with its brethren, which is, at this point, the 18-day. Nothing that I see can stop this. And that's because of the slope in the past days that created the slope of the 18 days of the 18-day average of closes. Yes, these days are all better because they're very much sideways, but you got to get rid of the weighting of the days when it was way up here, and that'll happen. That's why you're seeing the slope starting to change on that number. You're so far away from the Bollinger Bands that they don't have a meaning right now. I mean, if you're going to go down to the bottom at 1542.60, okay, I don't think it's going to happen. But yesterday that number was 1535. So what's going on is the Bollinger Bands are getting into a more normal slope. That takes days to occur. And then you try to end up with a pattern more similar to this one that you have right there. Let that occur. In terms of market momentum, it's favorable. It's not strong, but it's favorable. The market's been working its way higher, and if you look at the slow stochastic slope, it's been working right with the market. Not even overbought. So I just think more sideways action is probably in the cards here. Here's the silver market. Why don't we just go back here? And this is the day I want to be on, October 5th. God, it sounds so far ago. 1 week ago today. I don't think you'll deny you've got lower highs, you got lower lows, you're in an oversold condition, and the market gets a rally right here. That takes out a previous high, and it ends the downtrend. It does not mean a bull trend began. If the market's going to rally, and this is October 6th, the most I'm looking for is a challenge of the 18-day average of closes, and then a regrouping, because maybe the shorts got to bail. You don't know. It's just this signals the one to be out of all positions and go to the sidelines. The next day, the market goes up on the 7th, comes back down on Monday, yesterday. Today, you get right up to that 18-day average. I'm playing, what? Pinball machine. I shook it. It needs to, on the side, get a reset or right in front of it. Depends on the version. I'm a nut with those machines. And that's where you're at. You're at a reset now. And it's game starts again. Get under 321.50, you probably get a bit of a downside slope to it. But this is what's going to happen. These numbers, these Bollinger Bands need to come in. This is unusually wide. I can stand back here. You don't get those type of moves. And when you don't get them, and that's not normal, the market's going to adjust to that and probably develop a lot of sideways action over the next few days. Copper's identical. You didn't need me to be here and tell you anything. Here's an embedded stochastic. Just keep your eye on the bottom. If the red line gets over 20, the odds favor a challenge of wherever the 18-day average is. Market does two things. Number one, the stochastic, not stochastic, swing line turns up. And by the way, if you try to trade without these swing lines, I have yet to figure out how you can do it. It just shows you previous highs and lows, and it's all in our charting software. You just hit a button, bingo, your study comes up. And it's all done for you. You don't have to plot them. Well, you're making a higher high, you got higher lows, you still have the embedded stochastic, so you need this number, the red one, to get over 20 on a close. You get it right here. That's Friday, October 7th. I would now be arguing that I'm looking for a challenge of the 18-day average of closes, but more important, you're not short. You got out of your shorts back, if I'm right, on this date, which was Wednesday, October 5th, because you took out that high on the swing line. Follow through confirmation. Here is the market coming up, and today you hit the number for the first time. So now I'm expecting some false starts, both up and down. Get under 323.05, I think you start a bear move, but will it last? I got my doubts about it. I'm thinking that this 295 level looks pretty darn good right now. On the upside, might need to do more work before you develop a base that you can work higher from. This is the sugar market. Sugar's acting tired, but it's also acting like a market that doesn't want to go back down here anymore. It's having trouble getting up into this resistance area, and the Bollinger Band is chasing the market, especially from the top side. So that's something I'd be watching. This is the cocoa market, and I happen to have liked cocoa today. From the short side, challenge of the 18-day average. What's the pattern? I've got lower highs. I've got a shot, if it can break through, of a lower low, and maybe you can get down to 25.65. So it's one of the markets that I'm looking at. Now you get up into the WTI crude. Well, if I'm thinking the stock market's running out of momentum, why would I tell anybody after a rally from 74.97 to 86.65 to start buying the crude up here? I don't think that's what's going to happen. I think the crude needs to get back down to the 18-day average and spin its wheels for a while and decide what's new. This is the euro currency. The euro currency, the world was ending October 1st. You remember how seriously down this market was? Well, if you don't believe me, you were in the 145 level going into the end of August. Then all of a sudden you're at 132 in October. All you've done is come up and challenge the Bollinger Band. 138.25 is today's high. 138.27 is that number. Why would you press the market any further? Let the market consolidate. It's moved up a dramatic amount in just a few days off a lot of good news. Let it digest the news. And the same way that's going, well, I'd be looking at the dollar with the same type of thinking. Maybe it's fallen a little bit too hard. Don't contrarian trade. There's a point where I think you trade, take money off the table, and what that means is your bet off the table, win, lose, or draw. Step back, let the market regroup, and then take your shot at it again. I'm Ira Epstein. I want you to remember